Welcome to the Farmers.com Risk Management Daily Market Commentary for July 13th, the Monday. It's Mo Agostino, Chief Commodity Strategist with Farmers.com Risk Management. Well, today is special report day. It's the 2015 4th Annual U.S. Crop Tour Results Summary, new game plan, and new price targets. We'll get to that here in a second. But, our tour started on June 27th. I could have never predicted the outcome of this year's tour. It started in the state of Ohio, encountering lots of water, floods, rivers, lakes everywhere. It continued through the state of Indiana, Illinois, Iowa, North Dakota. There was just too many states with too much moisture, stress. We almost ended the tour on July 10th, traveling through northern Indiana, Illinois, and 2 weeks after the fact, we continued to encounter roads that were flooded, standing water, drowned out situations, rivers, lakes everywhere. It's a mess, and I think the damage has been done. Rain made grain last year, rain made grain maybe a month ago. The damage is done. I think it's irreversible. You can see pictures of folks taking advantage of opportunities, fishing, while the rivers like the Illinois and the Mississippi River were flooded. The last image I'll show you is from Casey, Iowa, that southern part of Iowa. That's why I can't rank Iowa anywhere near the top. I mean, this was the worst of all of it. I thought it was really bad in Indiana, but boy, that southern part of Iowa is not going to make a crop. In fact, many farmers are suggesting that it's the worst crop ever grown in 40 years. So we came up with some summary highlights from the tour. Some of the biggest highlights are that, I think we planted all the acres, but there's going to be about 1 to 3 million acres that will not get planted on beans. We got a lot of nitrogen runoff, late spraying, kind of having problems side dressing. The crops are at least 1 to 2 weeks behind, in some cases 3 to 4. It's not like last year. In fact, this year we saw maybe 4 states at most with portions of the state with tasseled corn by the time we were done our tour. Last year we had entire states tasseled, 9 out of 12 for the same period of time. So it's really night and day compared to last year. Nebraska's ranked number 1 only because we saw the least issues with the state, and of course they can irrigate. But the top I states, Iowa, Illinois, Indiana, are ranked at the very bottom because of that moisture stress. Again, I'm suggesting this, and we've already suggested this in past reports. If you have any hedges on, you need to lift those hedges. If those hedges, for example, on corn are below 5, lift those hedges. If they're below 450, lift that hedge. If it's still above 5, you can maintain that hedge. We had suggested booking 50% forward from last year's highs at 5, 45 to 5 on corn, 12.50 on beans. So that's kind of your guide, okay? But if you have placed some hedges on here in the last 2 months at lower prices, get rid of them. Your risk is to the upside going forward. We had some old price targets we put out on June 26th. We suggested, for example, on corn, I'm just picking on corn because I don't have time to talk about all of them. We suggested 420 to 450 short term. We're at 450 today. That broke, actually closed above 450, first time since June 30th of last year. Folks, this thing's going higher. Market's going to have to ration demand. In fact, if we use the July WASDE report, and we apply 158 yield on corn, and by the way, we suggested by mid-June that we could not rule out a 6 to 8 bushel per acre drop on corn. I'm now convinced of that, but I think because of my theory that I've been throwing around for the past couple months, that yield could disappoint and be much lower during the harvest period. 158 would take ending stocks down to 879 if I do not adjust ending stocks. 879 million bushels. I know that the USDA is going to adjust demand, so let's even say 1 to 1.2 billion. That to me equals at least $5 to $6 corn. And if the yield is much lower than that, let's assume 152, we drop ending stocks to 433. It's like 1993, from 2 billion to the final January number of 800. In 93, corn jumped 30%. Demand stronger this time around. But even if I adjust demand lower, we could still be in that 6 to 800 million, and I think corn could go above $6 a bushel. There is a small probability we could be setting up for a 2012 record high price. Small probability. I think the 5 to 6 is realistic. Anything above 6 at this point is a stretch. Again, there's been 4 other years where producers have applied less nutrients. 7 out of 10 farmers in our tour suggested that. You compound it with all this moisture, and I think the yield could be much lower than all analysts are projecting at this point, as well as the USDA. Our QT Market Center price count chart on corn could take us all the way up to that 650 area as we break this 450 mark here near term. So news price targets, again, the 30-day targets are realistic. My 60 to 120-day targets, not necessarily. Again, those are stretches. You're going to have to see yields come down considerably. When are you going to see that? You may start that in August, because in July, USDA refused to do it at this point. I think they're waiting to see if weather improves. They don't want to shock the market. So come September, October is when you might start to see lower yields and those higher prices. But markets always try to factor in the news. I think the smart money will know way before the average farmer will. And once again, thanks to our sponsors, Tasco Dome, Pride Seeds, Penta Tillage, and Southwest Ag Partners. Till next time.